Welcome to another episode of the Mark Moss Show. Now, these videos are taken from my recording of my radio show and podcast. I'm putting them here on YouTube for you. If you'd like to check them out on the podcast, you can just search Mark Moss Podcast. You can go to the iHeart Radio app or Apple or wherever you go and just search Mark Moss Podcast. Find it there. But I also got it here for you on YouTube as well. I hope you enjoy. All right, welcome back. You are listening to another episode of the Mark Moss Show where we talk about Bitcoin, we talk about the decentralized revolution, and we talk about politics, technology, and finance in the context of those, so just so we can have a better understanding of what is going on in the world, how it's changing, and more importantly, how we can personally navigate that so we can survive and thrive as this is changing. Now, one thing about Bitcoin that's very difficult for a lot of people to understand is that it's a lot of things. It's a lot of things, and it's going to be more things than what we know it is. It's a new technology, and so as humans, we try to understand it by comparing it to something else that we know. It's sort of like this, sort of like when electricity came out. The first application of electricity was the light bulb. So then you would say, well, what is this electricity thing? And you would say, well, it's sort of like a digital candle. Well, what do we need that for? Candles have been lit for 5,000 years, and they work pretty good. And look, it's portable. I don't need all these wires and all this stuff, right? So Bitcoin is like digital cash. Yes, it's like that. It's like digital gold. Sure, it's like that. But it's going to be so many more things. And so it's hard to understand that. And so I like to look at that, but really it's fixing a lot of things. And when you're looking at something new, like a new technology like this, one of the least important things to look at is the price of it. What's more important is the problems that it's solving. You're trying to predict where it's going to go in the future, and looking at the daily price or the weekly or monthly price is just a distraction, in my opinion. Now, I do like to say that the price is like the ultimate bait and switch. It sucks people in for the money, for the number go up technology, and then it switches them into a freedom mindset, long-term mindset. But, like I said, it is the bait and switch, and so people are coming into it for the money. And when you look at it from the money standpoint, you think about the adoption of it, and you look at Wall Street coming into it, the hedge funds coming into it, et cetera. And one of the biggest bank in the United States, J.P. Morgan Chase, head up by Jamie Dimon, you would think that being one of the biggest banks, and Jamie Dimon arguably being one of the most powerful and influential people in the United States and in the world because of running the bank, he's been a giant opponent of Bitcoin. I think it was 2017, he famously kind of came out and said that, it's a fraud, it's a scam. He said if anybody at JP Morgan even traded it, they'd be fired. He's been very vocal against it. And of course, it makes sense, right? I mean, running the biggest bank, you don't want something to come compete for you. However, the old saying, if you can't beat them, join them, so to speak. And of course, we've seen all the big banks, including JP Morgan, getting in on the Bitcoin action. And this week, we saw an article come out from their research team that was pretty amazing. And banking giant JP Morgan said in a note Wednesday that Bitcoin and cryptocurrencies are now among its preferred, quote, alternative investments. So wow, what a difference, right? It went from Jamie Dimon saying if anybody even traded it, they'd be fired, to now the bank saying it's in their preferred alternative investments. So what does that mean? Well, let's break this down a little bit. So it says that Bitcoin's steep sell-off. So what does that mean? The Bitcoin's steep sell-off. So the price of Bitcoin is down. Okay, it's down. I don't think that's a big surprise to anybody. It had reached a previous high of about 69,000 in November of 2021, and since then it's been sliding down. I'm going to talk about how far it's down, especially in relation to some of the other tech darlings. But in Bitcoin's steep sell-off, as well as that of other cryptocurrencies, has been profound, and it's been more profound than other alternative investments such as private equity, private debt, and real estate. Couple things I'd say about that. Private equity, that's not a liquid market. It's not mark to market. What does that mean? It's not. We don't know the price of that every day. A lot of private equity, especially when it comes to like venture type deals, you may not know how that shapes out for 7 to 10 years. Private debt, again, that's not mark to market. There's no liquid event. Real estate, it's not mark to market either. And so, of course, it's much more volatile. It's much more profound in their words. But it said, therefore, the bank envisions more room for a rebound in the digital assets class than in other alternative classes. So what they're saying is that because Bitcoin has sold off more than equity, private debt, and real estate, they expect there to be more of a rebound. So notice they didn't say they think it's going to zero and it's going to crash. What they're saying is, no, it's going to rebound, and it's going to rebound even faster than those other alternative classes. Quote here, it says, quote, we thus replace real estate with digital assets as our preferred alternative asset class along with hedge funds. That's what they wrote per the strategist. So now they're saying that we think that Bitcoin is better than real estate. That's what they're saying. I guess what they're saying is they think that over the next near term that Bitcoin will rebound faster and higher than real estate. It's their preferred alternative asset class. JP Morgan strategist reportedly said that they're sticking with their view that $38,000 was a fair price for Bitcoin. That's about 27.5% higher than its current price of about $29,000, $30,000 right now. So a lot of times people want to know, is it a good price? Is it not? Should I buy? Should I not buy? They say that they think the fair market price is $38,000, which is 27% higher than where it is today. So what does that mean? Does that mean that it's going straight up to $38,000? No, it definitely doesn't mean that. Does it mean that it can't drop lower than here? No, it doesn't mean that either. But what it does mean is that they're projecting what they think to be a fair market valuation today of about $30,000. Now, as an investor, the goal is to buy low and sell high, right? That's easy. Well, it's easier said than done anyway. It's so easy, just buy low. But how do you know when it's low, and how do you know if it's going to go high? Well, you're trying to figure out what these fair market valuations are. And so I think what they're saying is that they think the fair market value is $38,000. So anytime you can buy below that value, that would be considered a bargain. Now, that doesn't mean that fair market value won't continue to go up, which of course it will. JP Morgan and Citibank have also put out guidance. They think that Bitcoin will overtake gold. Well, gold's about a $12 trillion asset, which gives us about a 20x upside from here, just from that alone. When you're looking at venture type deals, what you're typically trying to do is try and invest into a company that's going to create a new category. So, for example, Uber. I've used this example before. But with Uber, let's say that you're in Silicon Valley getting pitched Uber, and they're like, "Hey, I have this app, and it's going to help do ride shares, and people are going to be able to call cars from their phone." And you're like, "Well, that's stupid. I never heard of that before." How much do you think it's worth? And they're like, "Oh, it's worth $100 million." You're like, what? I've never even heard of this before. How the heck did you come up with $100 million? That's a ridiculous evaluation. Well, the taxi industry is this big, and the limo industry is this big, and the rideshare industry is this big. And if we can get 5% of each of those, then we can get to 100 million, right? So something like that. And you would also look at the same with Bitcoin. If it can overtake gold per Citibank and JP Morgan's guidance, well, that's like I said, 20x right there. Okay, but what else? Well, it's kind of like having a Swiss bank account in your pocket. Swiss bank accounts have always been the best place to park money offshore, but not so much anymore. Now, these rich and oligarchs are getting their accounts frozen. However, the rich still put their money into offshore bank accounts to protect it, and there's about 40 trillion sitting in offshore bank accounts. Could it get 10% of that? Well, there's another 4 trillion there. There's $20 trillion in negative yielding bonds. Could it take 5 or 10% of that? Okay, there's another $2 to $4 trillion. And very quickly, you can see how fast that can start adding up. So while they say that they think the fair market value today is $38,000, that doesn't mean that's where the cap is. That doesn't mean where it's going to go, and it depends on obviously what time frame you're looking at. I like to think if you're going to hold Bitcoin for at least 3 years, you don't really need to worry about it. And I say 3 years because there's never been a point that you could have bought and been underwater 3 years later. If you would have bought at the peak in 2017 at $20,000, it took about 3 years to get back to a new all-time high. But it's not just that. There's a new report here that I want to talk about. It says that Bitcoin is better than the Nasdaq. Now, Nasdaq is all the tech-heavy stocks, the FANGs, Facebook, Apple, Netflix, Google, etc. And I want to show you that Bitcoin's too volatile, supposedly. But is it? Is it doing better than the FANG stocks? We're going to talk about that and more. I got some numbers in front of me, and it is going to shock you. You're going to be blown away here. And I got some stuff coming out of the bankers, and you'll be surprised what they said. Another analyst that I follow, a good friend, Nick Bhatia, he's been on the show before. He put out some reports this week showing based off of about 5 different metrics that he put out, that he thinks maybe it's more around the bottom, I should say, is around 20 to 20, about 22,000. And so what do I mean by that? The bottom meaning he thinks that if it could get pushed down that far, and I'm not saying it will, and probably not. JP Morgan's saying it's going to go up by 28%. But even if it did, if some of these hedge funds attacked it, whatever, the markets crashed and people were rushing for liquidity, he thinks that even if it got down there, that'd be the absolute bottom, and people would buy it back up from there. And so, we'll have to wait and see. So if the bottom is somewhere around 20 and then the current fair market value is 40, that means your risk to reward ratio is pretty good. I said if it just overtakes gold, that's a 20x upside. So I have a 20x upside with a 0.2% downside. I like those odds. Those are pretty good odds, and you should too. Now, the stock market and really the economy of the United States has been driven by the tech stocks. Over the last 20 years, of course, and over the last decade specifically, it's been driven by internet stocks. We talk about the FANGs. The FANGs are Facebook, Apple, Netflix, Google. Right, those kind of led it. And all the tech stocks or most of these tech stocks are in the Nasdaq index. You have the S&P 500, you have the Nasdaq, et cetera. And so the Nasdaq has been the place to be. And so financial advisors, they like to talk about how Bitcoin is it's a new asset. Maybe it's like a tech stock. It's been kind of trading along with the Nasdaq, sort of like it's been treated like that. And because it's trading along with that, it's got a lot of high correlation. So meaning they're correlated, moving together up and down, which they are. And I think what that demonstrates really mostly is just that a lot of these tech investors are also investing into Bitcoin right now. And so they just treat it like everything else in their portfolio. Now, everything's correlated until it's not, and so it doesn't mean it always will be that way. But I think that if we look at this, if we looked at, a lot of these tech investors look at Bitcoin as another tech play. So could Bitcoin be like the next Amazon? Not in a sense of what it does or the use case of it, but just in how the valuation could grow, things like that. Could it be the next Bitcoin? Could it be like the next Apple, Facebook, et cetera? But I think that if you look at it that way, it's way too small. It's way too limiting. I think a much better analogy would be to look at Bitcoin as the Nasdaq, not one of the companies in the Nasdaq, but as the Nasdaq. Because what we're seeing is all of these companies now being built on Bitcoin. Just like all these other companies are on the Nasdaq, listed on the Nasdaq, now all these other companies are being built on Bitcoin. We're going to talk about some of this new technology that's being built on Bitcoin in a minute. But if we look at this, like I said, most of the tech investors, most of the stock investors, really, most of the wealth that's been created in the stock market has come from this tech sector. The top 7 companies in the index are Apple, Microsoft, Google, Alphabet, Amazon, Tesla, NVIDIA, and Facebook, or Meta as it's called, which have generated $10 trillion worth of wealth in the last decade alone, which is pretty big. But they're not quite the darlings that they have always been. And so what we've seen for a couple things. One, what we really saw through the election process in 2020 is that there's a lot of regulatory risk that's been coming to these tech stocks. So everyone talks about, well, just wait until they regulate Bitcoin, which I would respond with, well, Bitcoin is already regulated. As a matter of fact, is probably the most regulated asset in the world. Every financial or every regulation entity in the United States already regulates it. The IRS, the SEC, the CFTC, we got FinCEN. You name it. Everybody has put regulations on top of Bitcoin, and they don't all chime in on other types of assets. And so it's already there. But what we're seeing is increased regulations against these tech stocks. And so, with President Trump, you saw he get kicked off of Twitter. But before he got kicked off of Twitter, they were talking about repealing this protection, this Section 203 that they have. I'm not going to get deep into that right now. But there's allegations of monopolies being built, of manipulation, election tampering, of censoring, things like that. And I think more and more people are starting to wake up and see this. The regulators the politicians are starting to see this as well, and there's a lot of regulatory risk there. And I think the future of tech stocks is greatly diminished because of that. I think we've seen all this growth, but in this environment that we're in, all the money in the markets is rotating from tech and growth and moving into value, commodities, things like that. With less liquidity, without the ability to borrow a bunch of money, it's going to make it harder for them to grow. And I don't see them repeating a 10x return over the next decade. That's where Bitcoin comes in. I think Bitcoin can outperform that. Now, a lot of people say that Bitcoin's too volatile. It's too volatile, right? Well, let's take a look at that. So year to date, from January 1st to today, Bitcoin is down 37%. It's a big drop. I'm not going to lie, 37%. But you know what else is down 30% year to date? Tesla. Tesla's down 37% year to date. Amazon is down 34% year to date, about the same. Netflix is down 68% year to date, almost double what Bitcoin's down. Shopify is down 75% year to date. Meta, Facebook, is down 44%. So when you look at the tech stocks, Tesla, Amazon, Netflix, Shopify, Facebook, Bitcoin's doing better. So yes, it's down. I'm not going to say it's not. I'm not going to lie to you. It's down, but not as much as Tesla, Amazon, Netflix, Shopify, Meta. Google's down 25%. So not quite as bad. And so, as I said, Bitcoin is being looked at as like a tech stock. It's trading along with the Nasdaq. There's a high correlation there now. Doesn't mean there will always be there, but it is there now. But it seems to be holding up better than Tesla, Amazon, Netflix, Shopify, and Facebook Meta. So is it too volatile? Well, if you think that's too volatile, then you also have to think all of those are too volatile as well. Now, volatility is also a good thing, right? Volatility works both ways. It goes up and down. How does an asset like Bitcoin go from zero to being worth $30,000 today without volatility? The answer is it doesn't. If it wasn't volatile at all, it would be stuck at zero forever. And so you want volatility. You want prices to go up and down, and that's what's happening. Hey, I hope you enjoyed that episode that was taken from the Mark Moss radio show and podcast. Now, you can check them out on the podcast app. Just go to iHeart Radio's app or search iTunes or wherever you go. Just search Mark Moss Podcast. You can find them. I also have a couple short segments taken from other episodes. You can find them linked up above in the video feed. I hope you enjoy them.